Making 26 bucks, essentially break even, trading the S&P here today, and I'm going to dive into this trade recap. So this one, I'm going to be honest, was pretty much a little bit of FOMO, I think, got the best. This is just done, but as I'm kind of sitting here saying to myself, you know, we probably, like, this is something we didn't need to deal with, like, realistically, really. So after this was on S&P futures, so there were no higher fees for trading shares with the broker that I'm using. So $26 is what you get, that the broker says as well. Is what we finished the day. And, you know, let's just get into it. So I'm looking at futures here, and you can obviously see this is, we'll go over the winning trade first because it's on the screen right now. And you can see we had the false breakdown, right? Push below, just barely, and then snap back up. The thing is, I traded the original breakdown. So I traded this first, and I got stopped out on this candle right here as it pushed back over these highs. And then all I really did was I flipped my position and said, okay, I'm going to get long. I got long there and stopped under the breakdown point, and targets were 1.5 to 1 risk reward or better. And that's what we got. We actually ended up getting a 2 to 1. Yeah, we got, well, we're up to like almost a 3 to 1 off that level now. And that was really it. So, you know, obviously that one worked good, but let's just talk about the reasoning why. And if you think with that, like, hey, why, you know, why would you be in a short and then go long? Well, I guess people do that. I generally don't do that very often. Here's where I kind of have this push and pull. And to be honest, as I'm recognizing it right now, you know, yes, did it net me a few bucks? Yeah, it did, you know, because that's using good risk reward. Okay, cool. That's good. But in the grand scheme, this has chopped me up many times in the past. Reason why I think today would be, if there's a day to make this mistake, it is today, and get caught in the FOMO, is because there's movement. You know, the S&P was down 2%. Now it's back up, or now it's not up, but it's down 1.6. We had a big move today. And when there's a big move, you know, the chances of chopping around are lower, right? So either we're going to hit stop loss or hit take profit, right? It's going to happen, right? Likely. Now we're getting a pretty big bounce here into the close. You know, cool. Great. The idea, though, was I wanted to get short because we had been down a lot. And the problem is that I'm FOMO because of this. I drew this level. I did not take this trade. And I'll explain why in a second. But I didn't take this trade. So this is the original short that I wanted, that I should have taken right here. Didn't take it. That provided an amazing move. Now, I would have not have held the whole way. I would have held and sold into somewhere in here, but would have provided an amazing move. You know, 2, 3 to 1 risk reward. Beautiful. So that was that. And these are on the 5 minutes. So these are day trades. These are on the 5-minute time frame. And I know, you know, as you break down, the more setups to the downside you have, the less likely they're going to continue. And so I knew that was a risk here. And that's exactly why I think I was quick to jump in and flip it. Now, the reason why I flipped it is really simple. If you jump out on the daily time frames, you know, why? Because of this. Like, realistically, yes, the shorts like were the 5-minute trade setups earlier, and that's what I wanted to do. But in the grand scheme, we are trending up on the bigger time frames, right? So the odds are not necessarily in my favor right now for shorts. If this just so happens to be the top, then yeah, like it would have worked, or maybe it works and, you know, you're good. But if it's not the top, chances are we're going to end up doing this eventually and make a new high. And if that occurs, then you actually want to play the false breakdown. So the inverse of the breakdown strategy would work better if we're obviously trending up big picture. And so on red days in an uptrend, especially, you know, first or second red days in a row, right? Chances are that we're going to bounce at some point based off the trend. If the trend ultimately breaks down, then we'll break down. But again, we're talking probabilities. We're not talking about, oh, I think this time we're going to do that. You know, no, I don't know. I don't care. It doesn't matter. It's irrelevant what happens next. You know what I mean? That's irrelevant. What's relevant is that we have this. So because we're trending up, probabilities are better aligned in my favor to see if we get a false breakdown to go long versus to trade the 7th, you know, breakdown setup, or in this case, like the 3rd breakdown setup on the day on the short side. You know what I mean? So that's really all that I'm getting at here. So the original trade was so we lose $100 in the first trade, 106, and we make 132. Now looking back, yeah, I could have made actually probably like $200 in that trade, or maybe more, based on where the thing has gone. But either way, I got what I wanted to, and that's it. I am also testing out, and it kind of close. I think I lost a little more than I wanted. I was probably looking for a stop loss around $90 here, but I'm testing out a 1.5 to 1 risk reward profile on 5-minute time frames. There will be a method to scaling out, yes, that we probably need to consider, but we're working on that because I believe that will increase my win rate, and I think that will be a net positive. Again, it will maybe cut a little bit into the average risk reward or the average win loss up here, but I think it will net positive in terms of increasing my win rate, and with still a good average win loss. I think that that's what I'm looking to do. So we'll see. Not that I think it's going to be a massive deal, but I just found through looking back that if I move my targets on a 5-minute time frame down for a risk 1 to make 1.5, I think I will hit substantially more take profits versus stop losses over a larger sample size. And when I say substantially more, let's say it's 100 trades. Maybe I hit, maybe my win rate was, 40% before. Maybe it goes to 45, which could be, 48, maybe 50, dare I say. And that's what I'm talking about, like, a decent amount like that. So that's the deal. And I'm going to log these two, but this is the current stats on the month. Break even day, $26, call it whatever you want to call it. Our average win loss here. And this is, these numbers are swing trades. I size larger because those I find more value in the higher time frame charts, and they take longer. So I'm not going to size the same on a swing. It's almost like double the size than I would on a day trade. Now, when I say double the size, it's not necessarily double the size. It just means my risk reward is double. So like if I'm gonna risk $100 on a day trade, I'm gonna risk $200 on a swing trade on the same ticker. And if I'm looking to target $200 on a day trade, maybe I'm looking to target $400 or $500 on a swing trade. That's really what that is. So that's how I do things, and that's how it works. But as of right now, that's the update. Good risk management, little FOMO. Probably didn't need to do anything here. And to be honest, I probably could have just been waiting for the false breakdown. Like I could have been waiting and saying, hey, let's get a false breakdown right here. We'll play it. And it didn't happen. So would have been no trade. False breakdown here didn't happen, right? Okay, no trade. False breakdown here, yes, now the trade. That's probably where that's where the mine should have been. And if so, we're talking about maybe $132 a day versus, a plus 26, because we wouldn't have had that loss. In the grand scheme, though, it is what it is. If I was to do that every single day and make $25 a day, over time scale it up, I'm not going to be pissed about that, because again, that's just practicing good risk management, good risk reward, and if you're systematically doing things and you're respecting risk, you'll be in a decent spot. I think I can optimize it a bit better. But that's the update. TradeZella, I'll link it below. Anything else down there as well. Thanks so much, guys, and I'll see you in the next one. Peace.